Testing, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. Do we have sound? I'm not sure if we have sound. And it's amazing because, once again, everything's different today. All the settings are different. Webcam doesn't work. Morning, Daniel. Oh, Danny boy. Okay, good. We'll start in a little bit. I got to go get a coffee. I'm a few minutes early. I think I'm going to try to get this thing off. It's not working that well. Nothing works. I don't think it's my PC anymore. I think it's the software for sure now. Everything just doesn't work. No, the video shouldn't be moving though. Lalo says, I think I should go back to school and study economics. There is no back to school. Going to a school is ancient history. So you can do everything online and you can do everything for cheap. Okay? So can you see my video? I think there's a slight delay, but you should see me waving, I think, at some point. Okay, cool. So let me get a cup of Joe. And I'm afraid to change the scene and stuff like that because I don't think things work. So let me go get a coffee. I don't know how to mute, so you're just going to have to listen to me make coffee, if that's okay. Every breaking wave on the shore tells the next there'll be one more. And every gambler knows that to lose is what we're really there for. I thought I'd owed you fearlessness. Now I speak into an answer phone, like every fallen leaf on the breeze. Winter couldn't leave it alone, alone, alone. 30 seconds. Look at that nice cup of coffee. Lovely till your mum. All right, Ni hao ma. Imad. Yummy, yummy, yummy in my tummy. So, looking at the stream, so I'm streaming. I got multiple windows open. I got multiple platforms open, and then I have to stream through the YouTube thing using OBS software. So there's a lot going on. The new PC is running at 5% CPU, and I'm pulling, I don't know, 500 or 600 megabits, or pushing 500 or 600 megabits per second. So the new PC works fine, except, so I'm pretty sure it's just the software ain't working. Unfortunately, I don't have a sound card. They forgot to put it in, I guess. So I have a new computer showing up this weekend. So I get to take down this new computer and then reset up the new computer. Isn't that a great use of time? Cool. So good morning. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I am a humble currency trader. I've been doing this for getting pretty close to 20 years, not quite 20 years. Before that, I was a venture capitalist. Before that, I was an entrepreneur, and before that, I ran a very large nonprofit organization, and then before that, I worked at NASA. All right, that's it. That's my whole thing. Background is macroeconomics from Harvard, and a master's degree in financial management, also from Harvard. Done. Neat. Cool. So, ask questions, get involved, treat your fellow currency traders with dignity and respect. If you got negativity, check it at the door. If you're a spammer, we're not interested. We have brains. Anything else? Thank you, Traders Way, for sponsoring the Forex.Today YouTube channel. You're a currency trader just like me. You might need a broker. Oh, cool. Why don't you consider tradersway.com? Test them out. Go to tradersway.com, open up a demo. You'll be in the back office in less than 1 minute. You can download MT4. You can have an ECN account. You can have a variable spread account. You can have a fixed spread account. I love variable. I've been trading variable forever. Love it. That's the way I go. And place some trades on the demo account. You'll see the execution speed is fast. The spreads are narrow. The swaps are big. All that is really good. All that is good. Tradersway.com. They want you to succeed because that makes you a better client, and they believe the key to success is education. Here we are. Cool. So, how can I help you? What currency pairs would you like me to cover today? How can I help you? It's a Friday. Let's just go full bore Q&A all the way. You do you by asking me. Why is the yen acting the way it does? Did you hear that their prime minister resigned? Lunkster? I mean, come on. You got to be on top of that, right? Abe quit. Abe's sick. Yeah. Come on, Baba. So there's a wake-up call, man. There's a wake-up call. If you guys don't know that, it's Friday, and you're like, what's going on? That's a slap in the face. Hey, it happens to me, but if it just happened to you, Like, holy schnicker-schnocker, right? Abe resigned. One of the G10 leaders resigned, bringing uncertainty to a country because you don't know who's going to replace him. And elections and all that need to happen. You didn't know that? How come? Okay? You know how many Japanese prime ministers I've traded through? 12, maybe? But Abe's been around the longest. Oh, for sure. Okay? Leo says, so this could be 6-month impact for yen. No, I never said that. I never said that. But no, macroeconomics is what matters. The flow of money is what matters. But that brings some undue, or let's say unplanned uncertainty, and that would be the typical response. Okay. All right, cool. Anything else? Gold? Yeah, we can do gold. Gold! So we can do gold, oil, and Bitcoin. How about that? You go your way, now go mine. Are we so? All right. Nothing really going on except kicking off this what we call a mid-tier support level that we identified earlier in the week. Notice we've just been range trading. Bottom of the range, top of the range. 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 Now, you can expect it to rise. I wouldn't if I were me. What we planned yesterday, the day before, and the day before that was a breakout pullback, and the roll reversal acts as support, and you kick it on high up here. So go ahead and let it do it. See, it did breach, but it didn't use the roll reversal as support. So we're still doing what we planned last week. Or you bought yesterday low. Okay? The swing trading group, we got together and we identified all these areas. So you may have, if you were swinging gold, I don't know if that's what you do, but yeah, the 25 area might have been interesting. So that's it. You'd still need to wait for this. So next week, how about what if we break out today and you catch it next week off the central? Could be a rabbit, could be. Let's do some biddy. Biddy, 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 can't you see? So this is our support level that we identified either last week or on Monday, if you recall. We said down to the neckline and then up, question mark? If you're a bull, yeah. Okay. And what else? I used the 21 as a kicker. So now we need a higher high, right? Let me get my drawing tool. By the way, did anyone get a Microsoft update yesterday or today? And then you restart your machine and it's like, hey, we took that browser you're not interested in and deleted it from your system and we reinstalled it for you. This is the new Microsoft browser that you deleted 3 days ago. Did you guys get one of those? You're like, you're kidding me. You just went ahead and reinstalled the whole damn thing. It's like crazy. These big firms just testified in front of Congress about monopolies. I don't think Microsoft was there, but like that's bull hockey. Right? And you're like, I didn't want it. I didn't ask for this. Just because I'm running your operating system doesn't mean I want your browser. Huh? But anyways. So we have some, right? We have some resistance here, don't you, Stank? So how do you want to behave in the future? let's go green here. What do you think of something like that if you're a biddy? Reb says it took hours to finish. At 600 megabits per second, it took me like 15 seconds. Not even 15 seconds, less than that. It just went. So that wasn't a problem. But it could be. I've been through that kind of stuff before. Maybe because it was a new machine as well. Maybe there was just less going on, but. Okay, so what do you think? Are you a buyer or a seller? See, if you're a seller, you're going to say this role reversal. Oops, I guess it's going to be fat. A bear is going to look at it this way. Hua? Okay. So you're either buying off the bottom or you're selling off the top. Or you're shaking your rattles and throwing seashells into the fire looking for answers. Reading tea leaves. Will Bitcoin go up? Ooh, what do the leaves say? Okay. What's up, RC Cola? Okay. What do you think? What would you do if you were you? Huh? Cool. Now keep in mind, this is what we talked about on Monday. Okay? Came down, hit the Tuesday, which is part of our counter trend, what we would have expected. Stabilization, stabilization, stabilization. So now you got to get ready for the next. And you're either one of these guys or one of these gals. Okay? Really, you do the tea leaves? I prefer throwing seashells into the campfire. That's my thing. I'm like, ooh, isn't that interesting? Guess I'm going to buy some Bitcoin. All right. So that's that. That's that. And here's the same thing on a smaller time frame. Padow, padow, padow. Obviously, technically, on the medium term, this is down. On the longer term, it's still up. And so now you got to, so Bitcoin down here and Bitcoin up here. This is what I'm looking at, right? Daily. Okay. So now what I typically do is I call this cutting the corner. And I'll change this. I'll drop into maybe an hour and start trading it that way. In Georgia, what you do is you just look at the roadkill, and if it's pointing to the sky, you buy. If it's pointing to the ground, you sell. And then you eat lunch. All right, so here's your my oh my WTI. Again, Friday front run, Monday buying. Expected target. Isn't that nice how we hit our expected target and the whole thing collapses? So now you have to decide, right? If you're taking this north, you're probably a little bit late, but again, there was a lot of Jay Powell volatility. What is your plan for September is really what it comes down to. And I'll remind you, last week, I asked you to start planning September. Then this Monday, I said, I'm already in September. What does that mean to you when I say that? Maybe it's a big question mark. You're like, I don't know what he means by that. What do you mean he's already in September? Anybody? What does that mean? then I'm looking into the future and trading it now. You can't be so basic selling yen. No, because today's yen is strong, right? So why would I do that? Well, it's not just a position. It's I'm not trading what you see today. Like if you're like most people are looking at their charts this way, right? I'm trading based on things I see on my charts next week and next month. And I might take, let's say I wanted to buy this and I'm like, okay, right at the London Open, I'm going to buy this dip, okay? Because I'm a bull, right? So obviously I'm going to connect this. But what if I stay in this trade now, not for a day? What if I'm thinking, instead of 22 pips, and we talked about this in the live trading group yesterday, instead of going for 22 pips, which this chart would represent, what if I'm going for 222 or 2,222 pips? The trade is still the same trade. Buy that at London Open. But based on what I see in the future, what I see in September, and maybe October, and maybe November, okay? The combination of fundamentals and long-term techs. Not for today, not interested in today. Not even next week, not even really that interested in next week. Next week will just fit perfectly dovetailed into next month. So I'm already thinking monthly, but I might also be thinking quarterly. Which is a hybrid of fundamentals and seasonality combined with technical analysis. So if I get this here, I can see that it's worth 22 pips, but I might be going for 2,222 or whatever it gives me, because ultimately I don't dictate whether it goes up 2,000 or only 1,500. I'm not the one in control. The market participants are, right? But that's how I'm thinking. So like last week when I'm like, you need to be thinking about September, and then Monday I'm like, remember on Monday I showed you I was in like 6 or 7 trades, right? All the same trades, some yen, some dollars, and all that kind of stuff. But what was the message I told you? These are September trades. They're not day trades. They're not even swing trades. They're nothing, right? They're nothing but the bigger vision. Right? Did you get that? Did you pick that up? Was that something? Because if you remember it, then it happened. If you can't remember it, then it didn't happen. I don't know what you carry with you on this journey, but the more you can carry with you, the better, right? Yeah, Raymond, sure. Raymond's talking about trading inside the trends. Yeah, for sure. But I would do it as a counter move. I would do it as a form of hedge. Okay, Raymond? So let's say you got 45 trades long macro, but clearly we're hitting targets across the board and you expect 3, 4, 5 days of profit taking. Can you sell? Yeah. On the small time frames. And really what you're doing is hedging. But not like the dumb hedge. I want you to dynamic hedge. But you may not be that good yet. I mean, you might be. You probably are, but I don't know. As a portfolio manager, it's not your job to hedge. Okay? If you're a portfolio manager, you don't know what I've told the client. The client might say, hey, I need to be long South African Rand. And I'm like, oh, I got the team for that. Right? I got a great team for that to get you exposed to that South African Rand. And so I'm assuming you're buying because you're the portfolio manager, let's say, of Rand Long. Czar to the stars. And then, son of a bitch, Raymond is selling it? Like, whoa, but I told the client you'd be buying it. And I walk in, and you're like, well, I'm making money. I'm like, well, you're making money, but you don't know how the client is exposed. You might be doubling his losses. You know what I mean? Like, because he might already be exposed to the downside, and he wants to be exposed to the upside to offset those losses somewhere else on a business deal. He's got transactions over there. He's not interested in our pissy little MT4 charts, right? But he needs us to hedge, and that's what I said, and all this kind of stuff. But now you're doubling down on his losses. I'm like, oh my God. So as a portfolio manager, no. Okay? But if you're just trading your own account and you're like, well, now, see, when you're trading your own account, you have to think of it differently. Or maybe you've been, or maybe it's the overall strategy for whatever portfolio you're managing. But you could say you got all these trades long on the long run. So let's say daily charts. You got 27 trades and they're all based on daily charts, great. But then you can see there's a weakness in the move for obvious reasons. And there's always an obvious reason. So maybe on a 15-minute chart, you take it down, or you take it down to London Open, and then you buy it in New York or whatever, right? You see what I mean? So it's truly a form of hedging. But you could screw up a really good portfolio by, losing on the way up and and all that kind of stuff. So you should be careful. Binary options were good for that because you had you couldn't ride it for a loss. You either lost or you made money. Okay. Cool. All right, so anyways, my oh my, WTI working its way up, and 2 or 3 weeks ago in our live group, we were talking about watching the EIA and IA reports, not for oil inventories, but for signs for demand creation. So we went through the supply and demand economics. And since supply seems to be recovering back to historic norms, which is good and probably why oil's back in the 40s, but we're looking for signs of the demand side of the equation. And that's how we'd get back to 50 or 60. We need the demand. So it really comes back to what you think that is and the type of analysis that you're doing. All right, cool. So, and then I guess we can quickly do silver. Okay, cool. Well, here's our bottom. Okay, so here's the thing. Like if you bought it in the market open, like that's when I'm typically buying, right? You'd be done for the week. Your stop would be here. We have a lot of discussions about stops lately. Or you could put it here, or you could put it here, or you can put it here. Okay, the standard operating procedure for a weekly swing trade is right there. Okay, and you would have done nothing all week, and then it popped up, and then you had this craziness over Jay Powell, but you don't watch every minute, so you might have missed that whole thing. And now here's what's probably going to happen next. Okay. Yesterday was partly cloudy. Today was partly cloudy. Tomorrow is going to be partly cloudy. Any thoughts on that, folks? So right now your stop could be a break even, and you're just hoping it keeps going. Or you take whatever money, but if your break even is at, like, let's say 26 and we're at 27.5, it's only $1.50. But whatever. See, we got to watch, in particular, maybe silver, but well, gold and silver really. We got to watch it when we have to look for signs that central banks have stopped buying. That might be interesting, right? Yeah, Raymond. Yeah, I've always recommended a second account for intraday trading and scalping. Um, yeah, it gets complicated. So because ultimately all you're doing is hedging. I mean, you might be calling it income when I describe it as income, but ultimately you're short-term hedging over the long run. You're okay, but you might be overthinking it. Like for example, what will you do if you had, let's say, $10 million on the upside? Will your scalping and intraday trading be at the same size? No. So you're trading on the short run and picking up pips, but is it actually hedging the overall portfolio? Probably not, because you'd have to be in your short term trades would have to be, let's say, equal to the bigger ones, but the bigger ones you spent 3-4 months building. So your day trading, your intraday trading and your scalping would be a fraction of that. So really, do you really want to do that? I mean, right? Like at some point, it doesn't kind of equate. So what you should do is buy real estate as a hedge instead of day trading. All right, so that's that. What do you guys want to cover next? I did gold, oil, and Bitcoin. No, I did gold, silver, and Bitcoin. Gold, oil, silver, and Bitcoin. Nat gas, look, buy, buy, buy. Okay, great. What else? Flourish Lucky says, isn't it weird or how the presidents of the main banks manipulate currencies? They don't manipulate currencies. Okay. Currencies are not manipulated, they're managed. And they clearly tell you how they're going to manage it. So if you speak the language, it just helps you make money. So like I said back in, what was it, late March or something, I'm like, that's it, I'm done selling or selling the US dollar for the next 5 years. Why? They told me. I speak the language of a central banker. I was taught macroeconomics by a central banker from the Fed. So they actually tell you. It's not manipulated like it's evil. Dude, they told you, now make money. Okay. New Trader says, should we don't trade yen pair few time in this week? That's a complicated question. But euro dollar, let's do euro dollar. Okay. So, there you go. So now what are you going to do? If you're a bull, you're going to look for levels of support over the next few days and you're going to buy dips. So all you're asking yourself is, do you buy this dip? I think you can call that a dip, right? Are you going to buy that dip? Are you going to buy lower than that? Are you going to buy the next dip? I'm going to start changing colors, I think. Let me do this. If you answer the basic question, you will improve your trading. Are you a buyer? Okay. And then, do you buy at support or do you buy at resistance? It's so much easier if you acknowledge, you say to the world, I'm a buyer of dips. Cool. And a dip is a higher low. Do you buy lower lows? No, that's where bankruptcy lives. So you buy higher lows. Can't be that complicated because you made a decision. So is this support? Okay? There's going to be a lot of selling pressure up here. So if you buy it good, at least you can jam your stop. John says he wants to learn more and be able to understand much more. Yeah, fxbootcamp.com. Put in a credit card. Pure mathematics is trading is also based on supply and demand. That's all it is, actually, pure mathematics. It's pure mathematics. Pure mathematics. It's just buying and selling. But the thing is, it's the fundamentals, okay? It's the fundies that create macro trends. And a macro trend is just the direction of the flow of money based on fundamentals. Will Nike build another factory? Right, for example. That's it. That's all it is. Does a corporation feel confident enough in the next 20 years of economic activity for them to build a new factory and hire new workers in a foreign country? That's why we need global trade. Remember, if there's no global trade, we shut down all our borders. There is no Forex. Okay? So now you go with the fundies. Okay? The fundamentals of macroeconomics create macroeconomic trends, and that's money flowing to some countries and back to others. Okay? And that tells you, right, whether there's buyers or sellers or the general direction, and that creates your supply and demand. Okay? That's where, so pure mathematics is, it's also supply and demand. Well, it's all supply and demand based on why would you demand a currency? Well, you need it. You need it. You understand? Okay? So, okay? Is this going to hold or not? And what's your plan B if that doesn't hold? Okay? Because you don't know, oh, I have to unlock this, it's sad. You don't know, for example, if this is going to act as support, if this is going to act as support, or let's say this acts as support. Or even that. Okay? Cool. So now you decide what kind of behavior you're going to iterate. What do you want to do at these levels? Do you think these levels are good places to sell or buy? Okay? So those are your supply zones. So here's your plan right now for your intraday scalp. If you see it on like a 1 minute or a 5 minute, not a 1 hour, if you see it turn and you're a bull, you take a shot. You scalp into your spot trade. Okay, a scalp might last, let's say, less than an hour. So a scalp is less than 1 hour. A spot is more than 1 hour. Okay? It's one way of doing it. If it doesn't kick off this hourly 21, if it doesn't kick off this role reversal, then there's no entry. And you wait now for the next opportunity. You're ambushing. Would you buy it here at 1850? See, I don't think we'll get a chance for it. I don't think it'll fall all the way back down to 118. So I think today's trades will either be this trade or this trade. I think that's one of those will be the one for bulls. And then I think we'd just run out of time. So from there, now you can get out of the hourly. Okay? And say maybe here, and we're 1850. Okay? Which I already have anyways. So now you drop into what, a 5-minute chart? And now you decide what reversal pattern you see from the downward price action to the upward price action. Okay. If you go your way and I'll go mine. Are we so helpless against the tide? All right. So you use any tool you feel comfortable with. Okay. That kind of thing. Any tool you want to feel comfortable with. Okay. Now, the interesting thing is you might be planning this out on a 5-minute chart, but you're about a day and a half late. Ultimately, but you have to be thinking that big. You have to be thinking over the course of, let's say, 3 weeks. I don't think a full month is always that necessary because a full month doesn't last 31 days. A full month goes from your buy zone to your target and you're done. That rarely takes 4 weeks. That's like a 2.5 to 3 week process. And then you set up the next month. That's why, like, usually in the 3rd or 4th week, we're already in the next month. Because this one's done, we already hit our targets, right? So, kind of, if you look at it that way, if you were looking at the euro dollar over a period of 3 weeks and you were a bull, you're about a day and a half late, which is interesting because now you can let this fall and maybe tiptoe into a trade that can last another 2 or 3 weeks. That's why, scalping only, I think, is very difficult work because ultimately, if it comes down to, let's say, 1850, okay, let's say it does this now. Like, this is the rest of New York brings euro dollar down. and then you get a little move here, and you decide to buy it. Okay. Okay, and you buy it down here on a 5-minute chart, even a 15, whatever. And instead of going for 50 pips, you go for 500. What's the difference? Actually pulling the trigger is no different. You bought it at support, but now instead of thinking about the day, like the rest of New York, like you have 50 pips between now. Well, I think it'll have to come down, but whatever. Let's say by the end of the trading day, you got 50 pips. You're like, okay, that was a good intraday trade, right? Good spot trade. But you could also be going for a much different target. Okay? You might be going for 122. Okay? For example. Okay? And that's closer to 500 pips than 50 pips. But the actual pulling of the trigger is exactly the same. So now the difference is your alpha. That you know it's worth more than 50 pips. That is where you earn your money. Is it worth 50 pips? Is it worth 250 pips? What? Well, you have to be thinking about next week and the week after next week to make that decision. And that's where you earn your value. But whether you're trading it for 100 days or 100 minutes, pulling the trigger is always going to be the same. At least it's always the same to me. Inevitably, I find myself on a 1-minute chart or a 5-minute chart, finding the strength to to do what I need to do. Okay? Remember, this gray zone is plan A for today. Remember this. I just went through this with you. Plan A and plan B. Okay? Of course, the challenge is going to be this. So on a 1-minute chart, that's what I want to be looking at, is continuing up and through and back. Okay? Because remember, when you're a bullish trader in a scenario like this, your two choices are buy at the bottom because you're a bull, or buy after the break as a bull. So you buy up here, not the touch, the break, right? So you're buying here or you're buying here, and it looks like this. So you're a buyer here or you're a buyer here. You see? And if this doesn't hold, you got your plan B. Okay. Your plan B is about 25 to 30 pips below where we are now. KG says, why not take profit at the highs and re-enter at the dips? You absolutely can. That's intraday trading or day trading, depending on the time frame you're looking at. Absolutely possible. It's just a lot extra work. Right? You're not thinking as a portfolio, right? You're not thinking as an investor, you're thinking as a trader, which is fine. But it's just extra work. I suppose the upside is you would make more money, but it is more effort, more time, and also the more you mess with your trades, the more likely you're going to mess up, right? Versus just riding a trend and doing nothing. Okay? Also, here's another way of also looking at it, right? KG? Because you're right. You totally can do that, right? I'm just showing you there's a consequence to it. But eventually, in a normal world, which we haven't been in for a decade, so for many of you, you don't see it, right? If we ever get interest rates high again, if you do it that way, KG, you give up the carry. You lose your swap. And remember, I come from a time when my Kiwi yen used to pay me 850% a year on interest only. Just interest income. Okay? So I'm not trained to give it up that way. Okay, so you totally could. And if you're not familiar with if you don't have experience in swing trading, you're not even going to think that way. So yeah, you could buy at the bottom, exit at the top, buy at the bottom, exit at the top. You have to be very, very good, and it takes a lot of time and effort. Okay, so after doing this for so many years, I found even though, let's say, that's intellectually or mathematically possible, it's actually pretty difficult to implement. I mean, it depends on also the time frame you're talking about. So, I mean, yes and no, right? Could you do it on a monthly pivots with 4-hour charts? Yeah. Would you do it at smaller time frames? Maybe not so much, right? So you definitely can. Okay, KG? You definitely can. I'd like you to explore that idea. Make sure you try on a demo account. You certainly can. Okay? I would say 4-hour candles monthly, sure. Okay? But then you also have to be good with pivots. So one of the things the live trading group and I have talked about a lot over the last few weeks is that we are going to blow through September pivots. So as long as you know your pivots at that level, which months the pivots are going to compress and which ones are going to expand, and you're thinking already through that, so let's say if you're worried about something coming down, so you want to take profit, you have to know when that is less likely to be true, because the last thing you want to do is take profit on a beautiful trade that you set up weeks ago, and you get out and it just keeps going and going and going. And you're like, oh no, I got out. Okay? Because I've also found, and maybe it's just me, I've found over the years, I'm better off doing nothing. Every time I touch the mouse, I'm this much closer to screwing up. So if I'm in a good trade, right, let it go. Now remember, I'm also backing this up with fundamentals and seasonality and technical trends and that kind of stuff. So I'm not saying be stupid or like Michael Jackson would say, ignorant. You're the ignorant, right? Or that sounded more like Mike Tyson. But anyways, yes, do what you think is right because you're analyzing the charts and you see an increase in risk or an obvious opportunity. Okay? Ultimately, that's what we all need to do. Okay? And boy, would you make a lot more money if you were doing it that way, where you're up 150 pips, then it drops 100, and then you buy again, and then you're up another 150 pips, then it drops 100, and then you buy again, versus the one person might make 300 pips, and you might make 500 pips over the same period. But it is more work. And more work means more time and also potential for mistakes. Right? Position trading isn't necessarily buying at dips, it's holding it. Holding. Okay? So, last night, we were talking about trades for 100 days. And we talked about multiple ways to manage portfolios when you're overseeing 100 stop losses, or actually we said more like 40. So imagine how you're behaving if you have 40 trades open with 40 stops. How do you manage the first ones as you're building your position? And how do you manage things when perceived risk is likely to increase? and how do you adapt your stop strategy. So we discussed 3 different stop strategies and how to implement them over the course of time, and more importantly, how to switch them at the right time. Go from one risk management strategy to another because of perceived changes in market conditions. So that's what we did last night at the live group. So how do you get 40 stops open? First of all, you have 40 successful trades open. Well, how do you have 40 profitable trades open? Well, you're not in it for 100 minutes. You're in it for 100 days. And there's a big difference. Now, the technical part as far as how do you pull the trigger and at where do you pull the trigger, that's not any different. I scalp every swing trade, right? I scalp every position trade. The major difference is your alpha, and your alpha says, these are the market conditions for me to buy. And your alpha says, you want to buy in market conditions like this because you're a bull, but also your mega alpha is that you're in it for 100 days, not 100 hours, not 100 minutes. And you have to make that decision first. Okay? Because now if you're in 100 days, when you're up 50 pips profit, you don't take it, you'd move your stop to break even, and you move on to the next trade. Get another one, move the stop to break even. Get another one, move the stop to break even. Get another one, move the stop to break even. Another, and another. Sure, out of 10 trades, maybe 6 break even because of price action and volatility and all these things that can happen, but the other 4 remain. And that's a good week. And then in week 2, same thing, 10 trades, 6 break even, another 4. Then the week after, another 4, and another 4. And it happens. Okay? The live group meets on Thursdays. You join FX Bootcamp, and then it says, hey, you want to join the live group as well? And you join. Howard's up 230 pips from last night. Good job. Yeah, so one of them that we've been talking about all week is the Aussie, right? So let's take a look at that. Let's go to a smaller time frame than daily. Okay. And let's review. Okay. So last week, the plan was to buy here. Okay. Actually, that's the second chance. Sorry. That's not actually it. I bought it here. Okay. And we had this plan last week. Okay. So here's my buy. That's called a weekly swing trade. So one of the things we've been working on recently, so last week, by the way, with the live group, I said this upcoming week, right? Last week, we talked about it being the first week of the end of the year. The first week of the rest of the year. Last week was the first week of the rest of the year. Not another summer week. A time to wake up and smell the coffee. Attitude change. I literally, and I mean that literally, took off my hat, right? And then pretend to put a new hat on to say, new game, right? There's a new sheriff in town. Okay? Okay? Cool. So there you go. There's the basis of that. So what's the next trade about? And so the other message that we've been talking about is building positions by trading multiple time frames. Okay? And what you're doing is you're day trading on your swing trading and swing trading on your position trading. Okay? Okay? So you can see how these trades compound. There's day trades and there's swing trades. Okay? And the funny thing is, and it's kind of a coincidence, kind of not a coincidence. So when we were here, I had some orders open. And you can see it didn't come back and take me north, right? But that was my trade plan. But I had the two things there. And then yesterday, the day before yesterday? Yesterday, when I started the webinar, we were here. And it was a million miles away from my entries. And while I was coaching, I just subconsciously, I deleted my orders. Anyway, so obviously, even with the crazy news, look, it went up to the take profit zone, then it went down to the buy zone, and it did both. Bears sold, bulls bought. I had my orders here 24 hours earlier, and I don't know if I screwed up or did the right thing, but I could have been in it. So anyways, going back to the lessons, this is a monthly trade. And this is a day trade. Now you might say, well, Wayne, you just told me, like you might just say, well, Wayne, this is a mistake. You said this was a weekly. Well, it is a weekly, but if I remember this correctly, oh, yeah, I see why. At the time, now remember, before this giant move, okay, before the giant move, this was what is now 72.05, 72.06. See, the monthly M2 has now moved up because that's how pivots work. It's calculating the high, the low, and then the close, right? And the pivots have moved since then. So last week, not even this week, guys, last week, the basis of the conversation, 10 days ago, the conversation was, I want to buy it here around 71.50. And I did 71.50. Because that's the September M2. Holy schnicker-schnocker. So 8 or 9 days ago, maybe even 10 days ago, I'm already on September. Mentally. My trade plans are not based on that day or that week per se. It's already September. Why is that important? Well, one of the things we've talked about is the third week of August. That is the third week of August. So 10 days ago, I told you I'm hypersensitive to the future. You guys remember that? I'm hypersensitive now. Hypersensitive. Okay? Hypersensitive. Okay? But that's how I put that together. It's a monthly trade. Oh, I was going to grab the... Okay? It's a monthly trade. It's a weekly trade. And it's a day trade. Okay? And we're up 350 pips. Yay! 350 pips. Obviously, you could have done better than that. The point is, one of the main points is knowing the exact right time to be doing all of this. Okay? Right here. Okay? Higher high, higher low. Higher high, higher low. Higher high. Remember, this was the central pivot point. It wasn't just a random line or a random number. That's the daily central pivot point, the basis of day trading. Okay? Cool, right? This could be your trade for the week. Or there's Monday, and then here's Tuesday, and here's Wednesday, here's Thursday, and Friday, cash out and go to the bar day. How many people knew I would be short the US dollar the third week of August? How many people knew that? And if you did, how long ago, how many weeks ago did you know that I would want to be short US dollar the third week of August? How many weeks ago? Two weeks? 3 weeks? 27 weeks? How many weeks did you know that that would be my point of view? Numerical answer. How many weeks did you know? Stephen Editor says 3 years ago, which is actually true, right? So as long as you know, you know. Right? Now, when did I specifically say Aussie US dollar? When did I specifically say Aussie dollar versus US dollar? Joseph says 6 weeks ago. July. 4 or 5 weeks ago, yeah. See, it has to do with, I'm going to guess, 12 weeks ago, the Fed gave us a change in their policy, and that made me short US dollar. And then the Reserve Bank of Australia made a change in their policy, which made me bullish on the Aussie dollar. And I said, this would be the canary in the coal mine. So the thing is, I'm not making it up, okay? What I'm trying to show you is how to tiptoe in the positions. That this is a monthly pivot for a month that doesn't exist yet. Right? There's also a weekly pivot and a daily pivot. And then on top of that, another daily pivot, another daily pivot, another daily pivot, whatever, so on and so forth, right? And also, maybe, and we don't know, I don't know the future, but maybe, just maybe, instead of lasting 100 hours, right, 24, 48, right? Instead of lasting 100 hours, what if this lasts 100 days? Now, it could even last 1,000 days, but there would also be some pretty decent declines in there just based on seasonality. So I don't want to plan 1,000 days per se, but I did tell you, I think roughly 12 weeks ago, that I would plan on being short the US dollar for 5 years. 2,000 days. Okay? I might be wrong. There will be times that I am wrong. But I know what I'm looking for. I know what I want to do. I have clarity of intent. And I will fire for effect. And there'll always be an amateur that walks in and says, "Hey, what's going on, fellas? Woohoo, look at that big green candle." And, well, those traders put me through Harvard, and then they're going to put my kids through Harvard. Yeah, I'm going to need $500,000 to put my 2 kids through college. So I need liquidity things. Right? I need those traders to come in like, "What's going on, fellas?" Yeah. We always need those dudes. "This is so exciting. I picked up 27 pips and doubled my trading account." That would be very exciting. Master Trader says, "Wouldn't this provide a carry?" Okay, well, let's talk about that. Okay, so to find your carry, you go here, and it tells you. And even for some reason, there's a negative carry on this one. So, not amazing. Okay? There was a time when that would have paid significantly more, but yen was the big one. Because see, back then, the Fed funds rate was at like 5.5%, and the Japanese yen was at 1%. And then they dropped it to 0.5%. And then they dropped it to 0.25%. And the Fed was still at 5.5. So you would be long Aussie, because Aussie was paying like 6 or 6.5, and I think New Zealand was paying 8.25. But you could borrow money from the Bank of Japan for 1% or less. So the carry was just sick. Okay, so when you look at this, I've lost $1.26 on this one, and I've lost 90 cents on that one. But I'm up 155 and 180, right? So it's not horrible. Typically, there'd be a lot more. If you go back in history, it'd be a lot more. I'd be up like 10, 12 bucks. Right? But whatever. It'll cost you in the long term, but it like earning negative whatever that is, right? What I'm losing, right? I'm losing $1 a day, but you know, it does add up, right? I'm going to lose, $300 a year. I mean, it's significant. It does add up, but hopefully your trades are worth a lot more than that. Now, a carry trade is back when you were earning super big money. It was just super big, nice, big, fat carries. But we don't live in that world anymore. All right, any last requests? How can I help you? Looks like plan A worked. Didn't even get a plan B. Amazing. Just riding at 5. Okay. Kitty cat yen. Aussie yen. More yens. All right. Why don't we just quickly look at them all? If you go. All right, what do you think of this? I know, coincidence, right? Look, I have it marked out. Here's the buy zone at 124.62. Quite precise, right? And we know the first hour of the first day. Cool. And then we said 126.64. So 200 pips, right? And look what it did. It went, I don't know, what is that? 8 pips more? Now remember, to get out, you're going to have to cover your spread. So really, we're talking about 4 pips, 3 pips, 2 pips, 8 pips, 10 pips, 5 pips. Pretty decent accuracy. Thing is, what do you want to do next with this? Okay. Does this frighten you? Oh, it should, for sure, eh? So what are you going to do next? See, what it did was it topped out. And do you know what pivot that is? That's the resistance pivot. We call it R1. Isn't that amazing? Like, it's actually, by definition, resistance. Isn't that neat? On top of that is a bullish exit. Okay, so you're going to have to make a tough decision here on this pair, or walk away, of course. But you're either a bull or a bear. What do you think about that? You're either a bull and you're taking this north, or you see this as bearish, and if you didn't sell the top, then you should probably, catch a breach and take it down to the 55. You got it? Now, the other one you could also do is say, if all the other yen pairs go up, then you do that. Or if you see massive profit taking or massive risk off scenario, then you do this, right? You make it an if-then statement, okay? But because it's happening now, it's irrelevant, okay? It's only relevant if you sold it up here. Now, you might have exited to take profit, and then you're like, holy crap, right? Or you sold it and you're like, aha, double tops 60% of the time work every time. Okay? Either way. But the fact that it's happening now is irrelevant because you have to set up the next play. Okay? Cool. So euro sucks. Great. Here's that pound. Okay, are you going to buy it at 140 or are you not going to buy it at 140? It's not that complicated. You going to do it or not? Okay. You make a decision on a higher time frame. Then you drop in, so you do like a monthly pivot, then you drop in and do a weekly pivot, then you drop in and do a daily pivot, and you fire for effect. Okay. Kiwi, same sort of thing. I think you're going to have to play with that. Kitty cat. Oh. Okay. So what price would you buy? 80? 80 and a half? If you were going to buy it, what price would you go buy it? This is all you need to be doing, guys. You understand? Are you a buyer? Sir, yes, sir! What price would you buy it? I have no idea, sir. Will you help me out? Oh, okay. Would you buy it at 80? Sir, yes, sir! Cool. Well, there's a plan. Why would you buy it at 80? I don't know. It's a pivot. It's a psych level. It's a daily 21. So if it gave me an upwards reversal pattern from this downward move, maybe you buy it. I don't know. See, what's happening is everyone that wanted to get out got out. And everyone that wants to get in is going to get in. You understand that? It's dropped 100 pips. So would you buy it in the next 50 pips? So you start like a real basic question. Would you buy it at the psychological level of 80? So let me show you how this works. You pop up a line, you go to line properties, and you go to parameters, and you type in 80.0000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000000 Would you buy near it? Would you buy it at 80 and 5 pips? Would you buy it at 79.90? Okay. Would you buy it? Okay. If you don't know now, you don't know jack. Okay. See, you're a price maker here. You're like, yeah, I'll buy this at 80. Cool. So what do you need to know in the next 4 hours to buy this? What do you demand as a price maker? What do you demand from market participants before you play? Like, give me that. Right? You're the bully here. Because remember, some dude or some beautiful lady is short this CAD yen, and she's asking you, will you buy this for me? You're like, not at 80.41. What are you going to demand? See, they're a price taker. They'll get out, right? So anyways, let's just go to that. What are you going to demand? Double bottom, 1, 2, 3, 5-8 cross, 21.55 cross, 21.55 cross on a 5-minute. You're like, oh man, that's too slow. What do you mean it's too slow? You can't wait for a 21.55 cross on a 5-minute chart? You're going to be in this for 100 days. What do you demand as a buyer? That's all there is to this now. Your money, the value you're adding is that you know, despite this falling 150 pips, you're a buyer. After that, you're going to buy it at 80 and you're going to 90, maybe 100. Okay? Okay? It's this that the value comes from. You've made the decision. And remember, it's not random decisions. You've done the analysis. Is the Canadian economy going to improve? Is the central bank going to normalize their policy? Is demand for oil and gold and wheat and beef and diamonds and nickel and car and cheap cars, are demand for Canadian products globally going to go up? It's a yes or no question. Okay? That's what you need. And by the way, this is why 2 or 3 weeks ago, our Thursday live group, we got together and went through the EIA and IEA reports, and we went through the supply side demand economics. And we for about 40 minutes discussed the supply side of the equation for oil, and then we discussed the demand side. That is the next step for a macroeconomist to say, how will Canada benefit in the future? You understand? Johnny says, will the new Prime Minister of Japan change the economic policy? I don't know. That's the problem. Okay? What happens with uncertainty? By the way, this has to do, it's the same thing that happens in politics in the United States. Okay? I described this at some point to somebody, but maybe we'll do it again. This year, I think the dollar is going to weaken if Trump wins. But if Biden wins, I think the dollar is going to weaken. What? Let me say that again. If Trump wins the election and is reelected, the dollar will weaken. However, if Biden wins, the US dollar will weaken. Okay? Now, 4 years from now, okay? 4 years from now, in November 2024, the dollar will be strong. What? Not long term, but short term. Why? Why would I say something like that? We don't know who the president of the United States will be in 2024, and we don't know who's going to be in the cabinet. We don't know what policies they're going to represent. That is uncertainty. Okay? And that uncertainty, like who's going to run the treasury? We don't even know, right? Like we don't know. That uncertainty will bring dollar strength. So going back to Stephen, was it Stephen? No, Johnny. Johnny's like, hey, so we're going to get at some point, we're going to get a new Prime Minister of Japan. Is that going to change the policies? I don't know. Japanese yen gets strong. Okay? It's the uncertainty that does it. Okay? What if taxes go up? What if taxes go down? What if we open our borders? What if we close our borders? Right? What if Elizabeth Warren wins the presidency in 2024? Wall Street's going to freak out, right? Like the uncertainties and will change. For example, you're thinking about building a $5 billion factory. It's a significant investment for your corporation. And you're going to build it overseas. And then something happens. It could be political, it could be economic, it could be health, global health rate, right? It could just be COVID-19. And suddenly they're like, all right, time to pull the trigger on this project. And you've spent years setting it all up and everything. And you're about to pull the trigger to start sending the money and putting shovels into the ground. And then boom, COVID-19 hits. And you're like, do we really need to invest $5 billion to triple our production when we can't sell anything anymore? No one's buying our widgets and gadgets because of COVID-19. Do we need to triple our production? You're like, well, why don't we delay and defer that for a while? And the money never crosses a border. Okay? Or let's say you send the money overseas, but you haven't broken ground yet. Or you just even started. And then COVID-19 hits and you're like, oh my God, no one's buying our widgets and gadgets anymore. You're like, you know what? I still got $4,900,000,000, right, left. Bring that home. Just, whoa, that goes on hold. Stop the shovels. Stop the cranes. Stop the bulldozers. Stop everything. Pull the money back home. Dollar gets strong. You see? Because you're like, I don't know what the next 5 years is going to be. I might need this cash just to keep my lights on and keep my employees hired. In fact, I can't be building a new factory and laying people off at the same time. Like, it just doesn't make sense. So I will wait. I will bring the money home and I will wait until I have more certainty about the future. Okay? You see how that works? So right now that's happening in Japan. They're like, holy schnickersnocker, are they stepping down? What does that mean? Well, what about all my long-term investments? And the yen gets strong. Snap like a crack of a whip. I attack front and back in this thing called rat. Okay? So anyways, that's what's going on here. But maybe at the end of the day, they're like, you know what? He's announcing he's going to step down, but it's going to take 6 months to a year to replace him. So maybe it's not so bad. So you get the exit here, okay? There's more supply up here than there are buyers. But what if all the buyers are sitting around here at 80? They hate it at 81.50, but they love it at 80. Okay? Where are the buyers? Are you a buyer? Okay? Right? What you gonna do? What you gonna do? She got a pocket full of pips and my homeboys do too. Okay? So anyways, that's how it works. Lots of people said, you know what? Get me out at 81.50. Are they going to buy it back at 80? That's your call. I don't know. So you need to ask yourself, what are you going to do? What would you do if you were you? Okay? So thank you for being part of the Forex.Today YouTube community. Thank you to Traders Way for sponsoring our community, tradersway.com. Remember, these webinars they don't cost you money, but they come with the obligation of visiting tradersway.com and opening up a demo account. Give them the opportunity to earn your loyalty and respect. Thank you so much for clicking the like button. Thank you for subscribing. Thank you for leaving comments on the videos. What else? Just thank you for being you. Thank you for the hard work you put into this. I hope you have a wonderful weekend. So peace on earth. May the pips be with you. May your profits be above average. I should have my new machine. Wouldn't that be nice? My new machine should arrive this weekend. So hopefully I have it up and running so that we'll have some kick-ass webinars all next week. Thank you all. all y'all.